It's your favorite day trading coach, Susie here. And today we're tackling the age-old question. How can you make $500 every day trading stocks with only $5,000? Because who doesn't love the idea of turning lunch money into a Lamborghini, right? But first, let's get one thing straight. If you think this video is going to make you rich without lifting a finger, well, then I'm sorry, but that's a fairy tale. Day trading isn't magic, folks. I don't have a magic crystal ball, and neither do you. Tell me, Great Orb, will Tesla make it to $1,500 next week? Yeah, right. You need a strategy and you need discipline and the ability not to throw your computer out the window when things go sideways. But now that we've got that out of the way, let's dive into how you can aim to make $500 a day using just $5,000. All right, let's roll. So first things first, before you can enter and start raking in that sweet, sweet cash, we need to talk about the sexiest topic in day trading, and that's risk management. Yeah, I know. It's like trying to make broccoli sound exciting, but trust me, it's essential. You've got $5,000 in your trading account. How much should you risk on a single trade? All of it? No. No. We don't want to turn our account into a discount coupon for bankruptcy court. So here's the golden rule. Never risk more than 1 or 2% of your account on any one trade. In our case with $5,000, that means risking about $50 to $100 per trade. That way, even if your trade turns into disaster faster than your first date with your ex, you can survive to trade another day. Next up, let's talk about finding the right stocks. Not every stock is going to be a golden goose laying those $500 eggs, but using the right tools, we can find the right stocks that will, in fact, produce this for us every single day. We need stocks that have, let's say, a little spice. I'm talking volatility. High volatility. We want these stocks to bounce around like a caffeinated squirrel. Now, a great way to find stocks with big potential moves is by using a scanner that looks for stocks that are gapping up or gapping down in pre-market. Anything with big news, big volume, or a wild earnings report is your new best friend. I like to think of it as shopping for drama. The more drama, the better. We want these stocks to be as emotional as a soap opera. All right, so let's get into some juicy trade examples. Let's look at a trade that we worked with in our Master Traders group on August 16th, 2024. The stock was ticker symbol CING. This baby gapped up over 100% in the pre-market, probably because the CEO accidentally tweeted a picture of his dog with confidential financial reports in the background. Oops. Actually, I forget what the news was on it, but hey, 100% is 100%, so we're on it. Here's what I did. I jumped in at $9.92 at 9:20 a.m. my time, which is Mountain Time. Now, using a $5,000 account, I bought 504 shares. Risk? Only 25 cents, because my stop loss was set below the 50 EMA. At just $9.70-ish. Now, CING is doing its thing, spiking and dipping and making my heart race faster than I'd like to admit. But patience is key. And this one kept a clean trend. The stock rips up to $20.83, but I planned my high target for $17.87, which is exactly where I sold. I sold into the greed, which is key. When you know exactly where to set your targets, you know exactly when to sell when there are still buyers and the greed is high and plenty of buyers to sell at top dollar. So I sold all 504 shares for a tidy $3,996 in profit. Ka-ching! This is why having a trade plan is so important. It allowed me to sit in the trade with calm nerves and just monitor the action and stick to my plan. That's how to get paid in this business. Let me show you what that trade would have paid me if I only had $1,000 to work with instead of $5,000. It would have paid me $793. And just like that, we have made our daily goal. It's actually pretty simple. But wait, don't rush off and buy a yacht just yet, because that was just one trade and one example. Let's talk about some different scenarios, like when things don't go so smoothly. So here's a lesson from the School of Hard Knocks. Also known as Oops, I Got Greedy. Let's talk about another stock, CNEY. This one had been hitting the scanner over and over again, and by the time I finally was able to take a look at it, it had already made an over 80% profit move, which I totally missed. It had held the 50 EMA the entire time, even through this pullback here. So I waited for the signal above support, and I got in at $1.23. My target was $1.44. And that's this line. And I was only risking 3 cents. So I was looking at a very decent trade, but we started to see wicks stalling out at this level, this $1.34 level. And when I first noticed that, I should have sold there. I would have still walked away with a decent profit, but I held on and ended up selling on this candle here at $1.27. So I still made profit, but it just wasn't ideal, simply because I ignored the signs of weakness, these stalling out wicks here, and I didn't sell when I saw that. Now, I'm not embarrassed to admit that buying on a false signal like that is a nail biter, for sure. But even with a false signal, because we stick to our exit strategy with a very tight, low-risk stop-loss level, that really soothes the nerves. It really does. It was a super low risk trade because my entry was right at support. Buying at support always sets the risk next to nothing. Had I bought even one candle later, the trade would have put me in the red for sure. So you really need to work with these special smart targets that show support and resistance. These will show you your risk and reward zones. You should never ever trade without having them on your chart. And hey, as wonky as this trade was, it still paid me profit. Always remember, some days the market just is not on your side, and that's fine. Trade your plan, not your emotions, and you'll live to trade another day. Now, before you start daydreaming about stacks of cash and quitting your job, let's talk about losses, because they will happen. No one, and not even the most brilliant trader who acts like they invented the stock market, wins 100% of the time. And if they say that they do, they are lying to you, or they've got Marty McFly's DeLorean parked in their garage. So let's talk about the art of walking away. One of the hardest lessons in day trading is knowing when to walk away. You've hit your $500 goal for the day, you're on cloud 9. But the market's still open and your hands are itching to click buy again. Don't do it. There's an old saying, bulls make money, bears make money, but pigs get slaughtered. If you're up $500, take the win and walk away like a hero. Don't be the pig. So there you have it, my fellow day trading hopefuls. Making $500 a day on a $5,000 account is absolutely possible, but it's not guaranteed. It takes patience, it takes skill, and let's be honest, it takes a bit of luck. But with good risk management, careful stock selection, and a solid plan, you can put yourself in a position to be incredibly profitable and make a very serious full-time living doing this. Just remember, you're not going to win every day, and that's fine. So that's why I have my group of traders only use low-risk strategies. If a loss does hit, it's only a few pennies and nothing more. And when you do win, oh, it feels so good. If you found this video helpful or at least mildly entertaining, give it a thumbs up, hit that subscribe button, and maybe, just maybe, you'll see me pulling in cash like Scrooge McDuck one day. Until then, happy trading.